Hey, this is Kevin Gormley, a CPA that does financial planning, and today I wanted to talk about leading edge financial planning's evidence-based financial planning as well as investing. And so what Charlie and I have tried to do over the last number of years and launching leading edge financial planning has been very exciting because we're able to now discuss the things that we really believe are in the evidence. And so today I wanted to talk about the heroes that people follow that are in popular press versus the heroes we should be following, because there are actually people that are doing studies on the best way to do things, and they are doing, for the most part, academic-based research, similar to what they do in medicine, empirical-based research, on trying to figure out what are the ways to do things best. And so I wanted to talk for a moment about the heroes that we do have, but then also the heroes we should have. But before I do that, let's talk about the agenda. Who do we listen to? For the most part, we listen to a hero. Could be someone on TV. It could be someone that writes in the Wall Street Journal, Barron's. It could be a neighbor. It could be someone who we think is very smart. And what I can tell you is, for the most part, these people have an agenda, and their agenda is to either make you like them, make them more popular, to sell you something. And so their agenda is not always in your best interest. Now, I'm a fee-only fiduciary financial planner and investment manager, so is Charlie. And our agenda is to help make people wealthier. At the same time, we are looking to get paid for doing a good job. So that's full disclosure there. But what I'm going to be discussing with you today is, since we are fee-only and fiduciaries, we're trying to find the best evidence that's out there to make the best decisions. So we do have agendas, and there's always some types of conflicts of interest. But let's look to the academics who are peer-reviewed and studies that are challenged in a way that on TV they're just not challenged. So evidence-based research on financial planning and investing. Who are the people that we follow? And then behavioral finance, the most common issues we all deal with. Now, this is more, again, there's a lot of scientific study in behavioral finance, and I will show you one of my heroes in it. But this is, even if we do all the evidence-based research on financial planning and investing, if we don't stick with it because of behavioral finance, because we quit on the plan, we quit on the process we put forward, it doesn't really matter what the process or the plan was if we quit on it. Because markets don't react the way we expect. It's all going to be for naught. And then, so what are some of the choices to move forward with portfolios, the investing piece? So who do we listen to? I haven't met anyone that admits to listening to him. I've not met anyone. But maybe people do listen to him. But his picks actually move markets very short term. One academic study was done about his picks, and if you followed his picks, you would have been much poorer over the next number of years. Many people follow Warren Buffett, and Warren Buffett is somebody I think that on some levels in investing deserves our admiration. But if you're looking for the next 20 years to decide on what to do with investing, eventually Mr. Buffett is no longer going to be able to do it. He and Charlie Munger, I think Charlie Munger's 95 and he's, or 92, sorry, and I think Warren Buffett's 85. So if you're looking for him to pick your stocks, eventually that's going to come to an end. So these are the PIMCO boys, Mohammed El-Arian as well as Bill Gross. And I better pull that picture down because it's making me look pretty freaky over there in the corner. You're listening to Mohammed El-Arian and Bill Gross. They have an agenda as well. And they're not basing a lot of their stuff. They're very smart people. They've studied economics. They've studied a lot, but they're looking through the lens of bonds. And so Bill Gross has picked, I think, 10 out of the last 1 recessions I think he's picked. He kept saying that there was going to be another crash in the market. They framed this new normal stuff, which was very interesting. The problem is they said that returns would be low. And what happened with bond returns since 2008? They went up. Stock returns went up. The new normal was actually, it didn't turn out to be true. Some of the economic parts of it did, but the investments didn't. So who do we listen to? We should listen to people that have actually done research or actually come at things with skepticism. One of the greatest parts, I feel like, being a CPA is that you're taught through the training of skepticism of taking someone's word for numbers, skepticism for taking data without going through the math, just a high level, and they call it professional skepticism. But Michael Kitces is somebody that we follow. Michael, master's in tax, master's in financial planning, MBA, wrote a book on insurance. Somebody that looks at things and actually says what probably is the best way to go. It's empirical research for financial planning. Bob Veras has been someone who's really taken on Wall Street and said, we think most of the time Wall Street lies, and here are the reasons, and has been pushing for fiduciary duty for all financial planners, just like Charlie and I have. Wade Pfau has done a number of studies on how should you use insurance products. What's the best way to invest? What's the best percentage you can take out in retirement? He's done the studies. Mary Beth Franklin studies on Social Security and how Social Security can affect the portfolio. Not the portfolio, but the financial plan of people that are retiring in their 60s. And so these people have really affected the advice that we give and the decisions that are made. And finally, Dan Ariely, predictably irrational, and then the upside of irrationality is he is a behavioral financial professor, and he's done a tremendous amount of work. And if you haven't read his work, sometimes you feel like you're in school, but he goes through decisions that we make every day that we think are rational, and they're just not. The financial planning, the certified financial planning designation is something I'm proud of, but more proud, I think, is of the personal financial specialist of the CPA Society. What the PFP division, it's called Personal Financial Planning Division, does is they look at things through the lens of taxes, financial planning, and investing. And so I've been very, very lucky to be a part of that. So the wisdom of investment people that have gone before us, Charlie Ellis is an author, but he is so wealthy that it doesn't really matter. He says whatever he believes to be true, and he wrote the book Winning the Loser's Game, which I highly recommend, about how to construct portfolios and then the patience and discipline it takes. Because if we put together financial plans and investment plans and we can't get you to buy into the plan and follow it, it really doesn't matter what plan is put forth. It's really the execution of the plan. Jane Bryan Quinn, just been a stateswoman when it comes to pushing forth the effort of the individual investor and going against Wall Street. Now, here are probably the three biggest heroes that I have, and people I think you should spend your time getting to know. First is William Bernstein, a retired neurologist. Now, he jokes and says that he thought doctors made the worst investors. And then he went along to say that he thinks almost everybody can make a bad investor. It's just that doctors have a lot of money and they can fall for a lot of different things. But he says there are two kinds of investors, be they large or small: those who don't know where the market is headed and those who don't know that they don't know. And then again, there is a third type of investor, the investment professional, who indeed knows that he or she doesn't know, but whose livelihood depends on appearing to know. And this was written in a way that he was talking about the way things had been done in the past. And, there's a movement of financial people that are now following evidence-based research. And we say we don't know what's going to happen. We're agnostic over the short term, but based on the 80 years of research, empirical data, that we have a pretty good plan for the long term. And so these are the two guys that probably have affected my investment beliefs the most, Eugene Fama and Kenneth French. The Fama and French 3-factor, 4-factor model, depending on when you read their stuff. But they think the market's always smarter than we are. Same with Bernstein. Don't try to figure out what's going to happen. You'll be wrong. But if you haven't heard of the 3-factor model, that stocks will beat bonds over long periods of time, we know that. They've also come out with small companies should beat large companies over long periods of time. counterintuitive, and then companies that are cheap will actually do better than companies that are expensive. Again, maybe intuitive, but it's really hard to pick companies that are not as sexy as the ones that are. A few other people I threw in here. Paul Samuelson I threw in because Paul Samuelson really was one of the first people, and I don't know how many years ago it was now, 70, 80 years ago, who challenged Wall Street and said he dares somebody to put out an index fund. And then Jack Bogle was the one who did. Now, Jack Bogle does have some things I totally agree with, but some of the beliefs he has, I think, have been disproven by Fama and French more recently. Like he believes just put it all in an S&P 500, don't invest worldwide, and I just don't think that, you know, he's kind of stuck by his dogmatic work from his 30s. Still a smart guy, still somebody I respect. And then Alexa von Tobel, she founded an investment firm. I think it's in New York City, but you know, the thing about her is that it doesn't have to be older white men that we follow. It can be young people, and it can be people of all different diversity that we can gain wisdom from. So the only thing I wanted to say about this, so I don't put everyone to sleep, is that there's been these empirical studies published. Okay, Harry Markowitz, William Sharp. Again, Markowitz is on this page, but every year since the 50s, there has been studies published. So we know that equities in the past have given about a 10% return, small cap stocks 12% return, bonds somewhere 5-6% return, probably lower going forward. We know all these things, and yet most investors do not get the returns that these asset classes give us. And you know, you don't even have to think about passive versus active. The problem is that we on a whim will sell, or we convince ourselves that this time is different, or whatever it is. And these are some of the behavioral finance most common issues. And when I say we all deal with, so do I. Overconfidence, loss aversion, recency bias. I mean, who doesn't think right now that buying U.S. stocks is a better way to go than foreign stocks? Because recently U.S. large companies have done the best. Well, anytime you have what's done the best in the past and you invest with that, more often than not, you're upset by it years later. And that's the next one, the fear of regret. What if we put money into some investment and it flops? If we can just wait, you know, if something does flop, if we are diversified enough and can wait, we're not going to take those losses. But still, the fear that if we do one thing, we're going to regret it is really big. Anchoring, confirmation or comfort bias, and this one is important because something happens, and if oil prices go from $60 to $30, we say, we read everything we can about the fact of why low oil prices should be low. If we're Republican, we read Republican stuff. If we're Democrat, we read Democrat stuff. We keep confirming the things we believe. And then procrastination, still huge. People still have money in the bank right now, large sums of money, and they're waiting for some reason to invest it. And they're just not sure. They'll just do it tomorrow. So I'm going to end the video here. And the next video will be about what have these people found. Okay, so I talked to you about who are the people that should be heroes. Now, they're not on TV every day. Most of these people are never on TV. But there's absolutely some wonderful ways to get their wisdom, and that's really what Charlie and I are, we're in the business of doing, getting their wisdom, building portfolios and doing financial plans based on their wisdom, and then helping people make it through this journey that we call financial planning and investing. Thanks so much for watching.